We now have Dnyanada Vaidya joining us today. She's a research analyst at BFSI. Dnyanada, hi, morning. Uh, it's a rainy morning, but the numbers which are or updates coming from the banking pack has been little better than expected. But one thing is standing out: the lending growth has been more than the deposit growth.
Right. Hi, good morning. Yes, the provisional updates that we have seen from almost all banks, it's been a very encouraging trend when it comes to credit growth, especially given that Q1 is a slightly softer quarter. The credit growth has held up. Even at the systemic level, we are seeing that credit growth is at roughly 18%. Surprisingly, the larger private banks have delivered good growth, but it's still slightly below the systemic rate. Here, the SFBs are driving strong growth for in the overall pack, and it could be attributed to a recovery in the MFI segment because that's the segment that has been facing challenges, and lenders, after being cautious for a while, are now readying for growth in that segment. But overall, a very strong set of numbers when it comes to the credit growth. Deposit growth has also not disappointed to that extent. Of course, the gap between credit and deposit growth is fairly wide, but lenders are definitely going for low cost deposits, and that is an area of concern because CASA mobilization, definitely the competition is very intense here.
Dnyanada, I want to pick up, each bank one by one, and let's start it off with HDFC Bank. Their credit growth of 15.4 odd percent, comfortably ahead of the system as regards to credit growth. But I want to understand where exactly is this coming from? How would you read into it? I mean, it is market share, lost around the merger time, which they've managed to regain, or would you say that this is just a base effect which is playing out?
Yeah, of course, for HDFC 15 looks good, and it's an acceleration from the 12 when they exit FY26. I would still say it's a tad bit below the system growth, which is roughly at 17.7 as on mid of June. But there's definitely, it's probably coming in from some revival that we are seeing in corporate demand, and also some of the secured segments that have been driving growth. It may not necessarily be from the mortgage segment, but certain other retail secured segments. But there is definitely some scope for acceleration here on, and this is a positive signal when it comes to credit acceleration for HDFC Bank and clawing back its lost market share. Yeah.
Dnyanada, I wonder how you're looking at IndusInd because that's the other big one, right? Growth actually coming back. Do you look at that more positively now?
Sorry, we do not have IndusInd under coverage.
Okay.
So
All right. Okay. And what about Kotak? There's probably a leadership change out there, which is likely to come into effect maybe 2 to 3 quarters from now. But growth holding steady. I know that it's below system. How should one look at Kotak at this point from a risk reward and from a growth perspective?
So Kotak for the last 3 or 4 quarters has been very steady performance delivery in terms of credit growth. It's ranged somewhere between in the range of 15 to 16%, and this is largely coming in from the secured retail segments. Because the unsecured has not started kicking in, we expect that we expect some positive commentary on unsecured loan, at least in absolute terms, improving for Kotak. Valuations, if I, of course, from a provisional standpoint, deposits did disappoint this quarter. CASA saw a fairly sharp dip here in Q1. But overall, we believe that it was a fairly decent update from Kotak Mahindra. When it comes to leadership succession, we still have around 6 odd months for the transition to be complete, and it should, we believe it should be fairly smooth. From a valuation standpoint, we believe that Kotak definitely is trading at attractive valuations, and it remains one of our top picks in the private banking space. Yeah.
And what about HDFC Bank? Given that the stock is still roughly down about 4 odd percent over the last 6 months, what's the expectation from HDFC Bank's stock performance?
We would want to watch out for the reappointment of the current MD CEO. The bank has already strengthened its leadership team with the appointment of the CFO designate and the part-time chairman, so that augurs well for the bank. But a key trigger for us would be reappointment of the current MD CEO. Secondly, HDFC Bank versus the other private banks, there is still a credit gap of 150 to 200 basis points if I compare HDFC versus its peers, which is ICICI and Kotak. So if that catches up, that should also bode well from a stock performance perspective. Yeah.
Okay, and Dnyanada, I just wonder if loan to deposit will likely become a constraint starting next quarter, and will it constrain banking sector growth, because the sector growth seems extremely strong, but deposits catching up looking like a concern. I'll give you some examples. Some loan to deposit ratios starting to breach 85, 88, 90 also in some cases, and even PSU banks, you're seeing the loan to deposit ratio is getting squeezed 80, 85%. We've not seen this for nearly a decade now.
Right. So definitely LDR from a systemic level is also at a very elevated position. However, banks are right now not seeing LDR as a constraining factor, and that's what managements have also been indicating, that higher LDR will not remain a constraint factor for credit growth. Deposit growth should catch up eventually over FY27. Also, FCNR deposits coming in should help in deposit mobilization for banks. That's how we look at it. There could be some narrowing in terms of gap between credit and deposit growth as we go into FY27.
All right, Dnyanada, thank you so much for joining us this morning, giving us that perspective.